Good afternoon. Today is the 3rd of March 2020, and in this video I want to give a quick rundown on the Ichimoku system, and then I want to explain a trade setup called the Kumo Breakout. So I'm using the Brave New Coin liquid index chart, and I've taken price action and candles off for now. But firstly, I just wanted to run through the different components of the Ichimoku system. So on the screen at the moment, the blue line is the Tenkan-sen, and the Tenkan-sen is midpoint of the past 9 candles, and the calculation is the high plus the low of the past 9 candles divided by 2. So it's a moving average of some sorts, you could say, and it's the quickest moving average in the Ichimoku system. So I'm going to take Tenkan-sen off, and in trading view it's called the conversion line, which is extremely confusing and inconvenient, but hey, is what it is. So the next indicator is the Kijun. The Kijun is the midpoint of price in the past 26 candles, and the calculation is the high plus the low of the past 26 candles divided by 2, which is a bit of a mouthful. But anyway, it's an important indicator in the Ichimoku system, as when price is at the Kijun, you could say price is in equilibrium, and it's a good place to get an idea of where the market is and place trades at. I'll take Kijun off. Now this is and Kijun is called baseline on TradingView. Anyway, this indicator lagging span is known as the Chikou span, and the Chikou span is price shifted back 26 candles, and it's a lagging indicator, so there's no real calculation in that. So it's just price shifted back in a line instead of Japanese candlesticks. So I'll get rid of Chikou span. Now we're left with CQ span B, which is in white, and CQ span A, which is in yellow. And I've color coded the two in this spreadsheet. So CQ span A is combined with CQ span B, which forms the Kumo, and the calculation is Tenkan-sen plus Kijun divide 2 plotted 26 candles ahead. So I'll quickly throw Kijun and Tenkan-sen back on. So yeah, the calculation of CQ span B is Tenkan-sen plus Kijun divided by 2 plotted 26 candles ahead. So these two guys, plus 2 Tenkan-sen, which is the blue, Kijun-sen, added together, divided by 2, plotted 26 candles ahead. And as you can see in the spreadsheet, it's yellow, and it's this yellow line here. So also the Kumo and cloud are synonymous. So yeah, when you hear cloud or Kumo, it's the exact same thing, and it's the plotted shaded area. So this is like a trend indication tool of like what the intermediate trend is of the market. So yeah, when we're in a bear market or a downtrend, when the trend has changed, CQ span A is down the bottom and CQ span B is on the top, and then as you can see back here, the trend's up, it's green. CQ span A is on top as it's yellow, and CQ span B is down the bottom. So yeah, last indicator is CQ span B, which we've obviously just touched on, combined with CQ span A forms Kumo. And the calculation is the high plus the low divide 2 of the past 52 days shifted forward 26 candles for those who are geeks out there. That's what it is. Alrighty, so I'm going to bring price back on, and now for the second part of the presentation I'm going to go through a checklist of a Kumo breakout strategy, and I'm just going to quickly explain how this is a setup, and setups are higher probability in the marketplace and they don't always work, but if you trade setups your probability is higher than listening to some guru on YouTube or Twitter talking trash all day. So anyway, I'm going to demonstrate what is needed for a Kumo breakout, and I'm going to show you a past Kumo breakout that failed that I had to take a loss on in the market. I'm just going to bring up Chiku span, so we've got all our indicators on here. I know it looks like a breakfast, but hey, this is Ichimoku system and it works. But anyway, here we go. I'm just going to press play on this candle. So this was like a move down in October 2019, and this is the spike up to 10,500, which we're yet to break on the 3rd of March 2020, but anyway, that doesn't matter. Here we go. I'm just going to press play, and I'm going to show you how this Kumo breakout failed. So here we go. So I'll pause it there. With this candle up, it's not a Kumo breakout unless the daily candle closes above Siku span B, right? So this wick, obviously, it didn't break out, so there's no trade signal here. I'll go forward more. Neither did that. Neither did that. Now, with this green candle, we did close above CQ span B, but if you look at the Kumo here, you can see that on my checklist for this setup, which one is it? Price breakout and close above Kumo. It did do that. Price close above Kijun. Yes, it's above Kijun. Bullish Kumo twist. Dun dun. Obviously we haven't twisted green here. The white line hasn't gone below the yellow line and we haven't flipped green. So on the 29th of October still we don't have a trade signal yet. So here we go. Going back through the checklist, now we can say that bullish Kumo has twisted. Another one is I found out in the Ichimoku system on this day that another filter is a 100-day moving average. Is a 100-day moving average above Kumo creating resistance? I didn't know this, and if I had known this, I would have been saved from taking this trade. But anyway, I'll turn it on, and as you can see here, it obviously it didn't break the 100-day moving average, and I'll just play price action until the next trade opportunity. I could even speed this up. Dun, 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 dun. So yeah, you can see we've just, I'll pause it there. But yeah, you can see we've failed, and then we've moved back below the cloud. And as a stop loss rule, I don't think this is on my spreadsheet. Oh no, it is. Chiku span above price. Obviously going back to this candle here, Chiku span was above price, but nonetheless we'll go forward. Stop loss. Breakout candle open. Kumo top, bottom, Kijun or fractal. So this is all different stop loss levels in accordance with your risk management strategy. So yeah, price closed below the open of this candle, so I took a loss here. And yes, if you're going to trade markets, you're going to take losses. Just a disclaimer. So yeah, that's that. That's a perfectly good trade setup that failed. So I'll just whoop, stop. Oh dear Lord, why won't it stop? Let's try this again, shall we? Okay, we're back. Okay, So that was yeah, that was an example of the trade setup losing, which yeah, happens from time to time. The probability is obviously usually works more time than not. So anyway, I just wanted to show you the last opportunity for this trade and how I traded it and how I took profit. And yeah, so I'll slow down this candle thing so I've got a bit more time to react. Okay, so you can see we had a TK cross when the blue line goes above the red line here. And yeah, we're potentially moving up, and you can see that we're almost coming into a Kumo twist here. So I was watching this in January and getting excited to see what was occurring, and I was watching the market as the days progressed and just waiting for the opportunity to arrive. So you can see this situation is a whole lot different than this situation. The 100-day moving average is in the cloud and we've already broken above it, and when the 100-day moving average is above the cloud, that's when it's a bit dicey, when you should obviously assert caution in taking this trade setup. But we'll move right along. Okay, bang. So this daily close, this is where I entered. I think it was the 13th of January, was it? Yep, that was it. So I'll put a yellow line there. That's a buy signal. We've cleared the 100-day moving average, so we can go back to my spreadsheet and we'll do it again. Yeah. Price breakout and close above the Kumo. Check. Price close above Kijun. Where's the Kijun? The Kijun's here. Check. Bullish Kumo twist. Look at this. Bullish Kumo twist. Check. Stop loss breakout candle, or wherever your risk management strategy is. I don't know how big your account is, so obviously you need to figure that out. Yeah, I had a stop loss, but price didn't take out the stop loss because it was in a profitable trade. Exit price below Kijun or fractal, $% at risk with stop loss. So yeah, that's my question about my stop loss risk management strategy. So yeah, as you can see from here, we'll press play. We can see what price did moving into the future, and I can speed all this up until we get a signal to close of the trade. Whoop, let's stop it there. So yeah, given the circumstances, I'll just quickly run through this. Let's close it here. We'll quickly put fractals on. I haven't got fractals in this template. Where is it? Dun, 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 dun. So yeah, let's look at this again. Let's slow it down a bit. So we're pressing play, we've obviously touched the Kijun there, and we just got to wait. So here, okay. So you've had two opportunities to take profit on this trade, and one's breaking this fractal level or closing underneath the Kijun. So yeah, this trade was a 19% trade to the upside, and yeah, that's where I took profit on the 24th of February. And yeah, this was my rundown on a brief introduction to the Ichimoku system, and showing you guys what how a Kumo breakout trade looks like when it fails and when it's profitable. Hope you enjoyed. Thanks for watching.